Hello Inderes TV. Kempower reported today their second quarter interim report, and I'm interviewing the company CEO, Tomi Ristimäki. Hello Tomi.
Hello Pauli.
So it was a tough quarter for you, and you had to cut your sales guidance for this year a few weeks ago. So how would you summarize what changed in your growth outlook between the start of this year and now?
If you look at the complete start of the year, of course, the big topic is the missing orders from our main customers related to this destocking issue. But when we look at the guidance, I think the end of the quarter two ordering was the biggest effect on the timing. When we look at that, looking at it positively, this looked very good to be able to fulfill the gap with the new customers. But it seems to be that things are moving slower. And we had to analyze the whole year based on this behavior of the first two quarters, and that actually then looked what it now is, the guidance.
Well, even your current guidance assumes the sales to pick up in second half of the year compared to first half. So what?
Or stay at the same level. But basically, this is a very typical behavior, and we are seeing actually the customer cases behind that, and that's like looking at the opportunities we have at hand and the forecast. A little bit more, let's say, pessimistically, of course, than in the beginning of the year, but yeah.
Okay. You told you got 32 new customers, which sounds positive during the first half, but how this compares to your new client acquisition in the past years, and how significant is this?
This is quite significant. If we look at significance as customers, like comparing the customers with over 2 million purchases last year, that was the number was around 30. So we have a comparable figure of new customers with significant potential.
And you see that these all could exist.
This is something that it was calculated based on the significance of the customers, that they could be generating the very potential revenue in the future.
Okay. Well, despite the challenges in European market, you have made a gradual progress in the US. So how would you summarize your situation there, and what are the key drivers going forward?
Yeah, beginning of the market, I think we have gotten a good response from the US market. Hope to also release some news from customer references there this year. But also 20% of the new customers acquired was actually coming from the North American market, and among them a nationwide CPO. So this is something that we look at as a positive progress in the US, and having the Q2 more than 500% growth compared to last year is of course great achievement.
Yeah, sure. So it's been a tough year also for the entire EV charging industry. So do you see increasing price competition among your competitors?
I think that is the next story of the next 6 months, when there is less opportunities, the price competition is affected. I don't think a material change, but of course it gets tougher when there is less cases where you can actually compete. Our portfolio helps in the price competition. When you can differentiate, you can offer benefits instead of price reductions, but that's not only thing you are. But definitely this will affect the market situation when we have this different, because like commented, the amount of installation is growing, yes. But because of the destocking of the whole industry, we don't see that in the value chain position of manufacturers. So this is a tough situation for all manufacturers.
Well, your sales margin declined significantly in Q2 actually. So is this something to do with the price competition, or is it purely about the inventory write-downs?
At least in this quarter, it was the inventory write-down was the significance, and as Jukka commented in our presentation, that without that it was over 49%, which is a healthy level and our typical level as well.
Yes. Well, finally, you announced you target cost savings of some 10 million euros by the end of this year. Can you give us some idea where you see the cost-cutting potential and which areas you want to keep untouched?
I think we have to look at this year in a short term. So we have to actually adjust the operations. We look at, I think, human resources as one big thing in there, because that's where we have most of the Kempower investment is also, when we have discussed this before, it's OPEX investments what we are doing.
Yes.
And this is now scaled to a bigger operation and scaling for the future growth. So we need to adjust things in there. And I think when we're looking at the cash flow position, then the inventory level is also matching the growth of the previous guidance. So we need to do something for that.
That's clear. Thank you, Tomi.
Thank you.